Hey everyone, we're looking at FedEx, and this was one I was hoping we'd see retest a little bit lower, and this is just one that just started trying to bounce back. The overall market's trying to rally back, and I still think that this doesn't change kind of the concern I have with the overall market. I just think that we're way overextended, and we're seeing them try to take this higher here. I think it'll be short-lived, and I think as it starts to move back up into this area, probably 165, we could start to see this hesitate. But I don't think it makes sense to see a 12% return start to evaporate here. We could add a little bit more. It had this continue to break down. I wanted to give this a little bit of time to see if it developed, but it's pretty clear that they're trying to rally it higher. And I just think the risks outweigh the reward here to try to sit in this longer, just in case, because it could come back up in here. And now we're saying, well, we're taking a lot off the table here, is just to see if we'd be right on the long term, where we could just exit out, lock in our profit, see how it trades in here, and then choose again if we want to go short, or hey, maybe they break it higher, we go long. As far as I'm concerned, I just want to make sure that we're locking in profits. That's what you want to be doing, and not riding them too long. Sometimes we make those mistakes. I'm human. I make mistakes too. That's the thing about trading, everybody. You gotta realize that everybody falls into it. No matter how much you study, no matter how much you work, it's about trying to take as much of the human emotional thing out of it. It's very difficult to do that. But that's why technical analysis, in my opinion, works so well, because what I always found when I was doing fundamental analysis would you always have another reason or excuse of why you think that it's okay. And this kind of makes you, I think, a little more, you're dealing with price, and if it starts to break through certain points, and you've already said, hey, this doesn't look right if it starts to do this, but you're planning for that in advance before any news comes out or any of these other things. So I think it's a little more powerful. It makes you at least look at the real facts of the case, the real facts of when you buy the real facts of why you buy something is to make a profit on it. Not to say to everybody and your buddies, hey, I'm short FedEx. You want to say I'm short FedEx, during this move, and we weren't able to get that last point, whatever, but we did make 12%, and in a short amount of time. So that's what you want to be doing, especially in a market like this. Who could say that you're making 12% in a declining market on that short move? This is not to take advantage of this bounce. Now let's be honest about this bounce too. I want to say this here. This was a very quick move, and this was one of those just programs started kicking in, and you saw it just from an overextended period. That was a very quick bounce back. It would have been very difficult to really get positioned into that, and get positioned in the long side, and the risks outweigh that. Sometimes people may think, well, why didn't we buy there? Why didn't we just cover and buy here? But because you're still dealing with a pretty good decline, and you got to remember, we've been in sideways action for a while. We're seeing that first big move. You're going to see that bounce. We want to try to cover into that, lock in our profits, and then see if we start to move back down. But I just wanted to kind of state that, because that's how I kind of look at things. Hopefully that makes sense to some of you, and you kind of agree along those lines. Anyway, FedEx did pretty well for us. We would have done a little better had we been able to get a little bit down to that 130 range, but anyway, left a little on the table, but still made 12%. So can't fault that. You got to be happy with, you keep banging away at that kind of situations, and you do well.